Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Yeah, welcome to the Foundation for the Study of Cycles. Happy New Year, everyone out there. Thanks for joining me. Let's have a new episode, the first episode in the year of 2024 about cycle analysis. Today's episode is an how-to, and I will talk about the new feature we have about resampling or aggregation of different time series, which makes it much more easy to analyze different time frames without the need to switch the dataset, which makes multi-time frame cycle analysis on one dataset more smooth, more easy. It's there so you can follow me online in parallel for that session to try it out. It's already there. That's the purpose of today's session, to kick off with something new for the new year. That's it for today. But before we start, I need to make you aware, if you are not already, on our yearly forecast. We are just starting tomorrow. So if you have not heard about it, I will highly recommend to join our market forecast, which we host every year. So this is the fourth time now we are hosting this, and I'm so proud that we have 3 special guests this year, which will appear starting tomorrow, which is Dan Hurley, Robert Prechter, and Larry Williams. I think there's not much to talk about these names. We are very proud and thankful that they will join the foundation, presenting their outlook for the year to come. So you're invited. Just visit our website, cycles.org. You will find the market forecast blog post there. And if you're interested, just read through the presenters. It's a very, very high realized, recognized lineup of speakers. So hope to see you there starting tomorrow. So cycle analysis on current markets. You won't find more starting tomorrow, 2 hours each day for the next 3 days. So therefore today, let's keep a focus on new features. Let's get into it. Today I need to excuse, for whatever reason, I'm not able to follow the live chat. So normally I will always take the time to answer your questions. And I am live today, but unfortunately for whatever reason, I can't see the chat in parallel. Next week, Monday, this will change. So please just excuse for that. Okay, let's get into it. So what about resampling? What about aggregating data series into different time frames? So let's switch to our tool set here, which is available to anyone. This is the basic chart you will see, or everyone will see, once you switch to our FSC cycle analyzer. I have just charted daily data, which is sourced from Yahoo Finance on the S&P 500 with the latest data as of today. This is what you will see when you start the daily cycle analysis on the S&P 500. And you know that the basic analysis, like seen here, then starts with the standard amount of 850 daily bars, which is always used to start your analysis. You can change the amount of data which is taken into account by switching the start and end point of the analysis, but that's just the starting point. The new resampling features which come into play can be seen here in this new section, which is available since some days already. So you can see it if you log into the tool set and want to repeat this analysis. You will now see 4 new buttons which appear. And the first one, which is highlighted by default, is OS, which stands for the original series. So if you're starting to change now your analysis, you can always switch back to the original time series you have loaded from whatever data source. So this is where you start your analysis, and this is always your fallback button to go back to the original series, because if we now change something or do some aggregation, that's the button you can always switch back to the original series. You know that for the original series, or what is charted here in dark blue, we always have in sync the current spectrum plot of that data series, showing the cycles in the spectrum. And these selected cycles here by the peaks in the spectrum are also shown in the table view on the right. So now, what's about the new resampling feature? You know that when we are talking about cycle analysis, it's always important to take into account multiple timeframes. So the daily timeframe we have just seen a second ago on the S&P 500, once we did our cycle analysis on that time series, we should always check the higher time frames to check for higher cycles on higher time frames. So therefore, if we start with daily cycles on the daily analysis, it would always be standard procedure to switch then to a weekly series of the S&P 500 and check the weekly cycles. Normally, you would now need to load a weekly data series. So you need to open a new window, load a new data series. You need to have the weekly data sourced from somewhere. So you rely on the data feed being reliable, that you have the weekly data available, and then do the same procedure in another window with another data series. This is now more simplified. So if we have daily data, resampling means we can upsample or aggregate daily data into any higher time frame we want to. So, and the simplest way would be, once we have daily data available, it's just easy to aggregate all the bars which fall into one calendar week. Let's just aggregate that information into one bar for one calendar week. That's just the aggregation of data. And therefore, it's also a kind of intelligent feature. So it just checks what bars are available for that week, uses each Monday as a calendar week starting point. We know that each bar starts with the open, so the start timing-wise of that week. So a weekly time series starts with Monday as timestamp, and then from the closing perspective has the last close that is available within that calendar week, which normally would be the Friday close. So that's how aggregation works. And the intelligent topic here, not really intelligent, is it uses always the last close available in that calendar week. So for example, if Friday is a public holiday, doesn't matter, then we have the close from Thursday. So then the price for the aggregated information will be taken from the Thursday close. So you don't have to think about missing days, and it's also not taking an average out of the weekly series, because the close of the weekly series is the close from the Friday close. So it will not try to smooth out or find some smoothing during the week. It will just aggregate to the time series and use the last data point for that time frame we are switching into. So enough talk. Maybe I made it too complicated from the talking point. It's just simple if we switch back to the chart. So if we, and this is just the simple button which will now aggregate this daily series. Yeah, let's make it even looking here. So now from the time series you have a day by day. Yeah, and let's switch now to calendar weeks. Yeah, and I can switch forth and back. You see that for sure the price information will stay the same. But you see, if I switch to calendar week, I now have only one bar per week, yeah? As you would expect for a weekly data series. That's quite simple. So, and you see just by doing that on the fly, that the spectrum in the lower section, in the table view, just is updated in real time by just clicking a button. which makes it much more easier because we don't need to load a new weekly data series where we need to take care that the data is correct and everything else. So by just pressing this button here, it will automatically aggregate into calendar weeks. Make sure Monday, Friday, taking the last close, all the little things, and then you have the weekly series, apply our cycle analyzer, get the spectrum out, and then that's it. So now we are coming to the more interesting part. You see some additional information on the screen. In the upper, once we did that at the first point in time, in the upper right corner, and I will do it again, daily, weekly, you see this blue box popping up, which is an information. So everything works, but this is an information that it will inform you about that we only have 177 weekly bars available for that analysis, which, to have proper cycle analysis, might be not enough data. You see this also at this lower section here, which is standard information. So if we have 850 daily bars, you see here, and now start to aggregate 850 bars into weekly bars by design, we will then come up with 177 bars only. So to be aware of that, I would recommend always now that we need to load more data onto our daily analysis before switching to weekly data, because just using 177 data points for cycle analysis, it's the same time duration here, but it's not enough data to have reliable output from the spectrum. So therefore, we have the features there. That's nothing new. You should be aware of that. We should now load more data onto the chart first before we really could use the daily data. So you just need to keep this in mind when doing that. So I will switch to maximum. It will always only, and maybe this is what you need to have in mind, it can only load more data on the original series. So it will not load weekly data onto the chart because the source of the data is daily data. So once we load more data, the load of more data is always applied to the original series. So therefore it's switched back to the original series. You see that we have now much more data available. Now you see that the start and end point of the daily analysis has not changed. So still these 850, all the same. I would not change it now on the daily chart. Let's now switch to calendar weeks. You see the same warning because it's right now using the same period, but now we can align the starting point for the analysis on the weekly analysis with the anchor point of the start. So we just click this button here, just click on the chart somewhere in the past to set the new starting point, update the analysis, and now we have used much more data for the weekly analysis. Now for the weekly data set, we have 1,253 data points, which is quite good. I always recommend around 800 to 1,000 bars. So the weekly analysis now uses 1,200 data points, and the daily, and that's now the beauty. You have not altered the daily period. So if you switch back to the daily, you see that it remembers that for the daily analysis, it's just still using the 850, what we wanted to do. And on the calendar week, now we can switch back and forth. It is still using the longer period. Yeah. So this is just what you need to do initially. So now you can just on the fly switch between the daily and the weekly. Yeah, daily and weekly here. So once you have this in mind, it's just easy to just load one data set, start with the daily analysis. We see a cycle of 84 days. It's active here. It's just the standard principle. We do our daily analysis for the most important cycle here. We see that this cycle is in a downturn from that point in time. Often then you add the technical analysis in addition. This was indicated some days or in conjunction with the cyclic tuned RSI indicating a possible top here. We informed you anyhow during the last week, short in the middle of December, about this opportunity here. Markets now have come down after Christmas to this point here. So this downswing cycle on the daily is still active, has more time to go with the cyclic RSI. So now we don't need to load weekly data. We just with one click switch to the weekly analysis. You see the cyclic swing is also active here. Now we have just the weekly series, and now we have the weekly cycle here. It's just real time. It's just with a blink of an eye. We have the 180 calendar week cycle, which is the most dominant one on the weekly series, where we often discuss that this cycle now is in force, and this is a longer upswing cycle, also supported by the cyclic RSI in last year, proposing that indication here. And there's still room to the upside, time-wise, and also from the indicator here. So the reading from the long-term and short-term cycles is just without switching the data set. And this is what I want to point out here, is we can analyze multi-time frames just from the same window. So the daily cycle with the 80 cycles having a sell signal pointing downwards, that's the short-term cycle. Switching to the long-term weekly cycle, doing the same. We have the cyclic RSI with the longer-term cycle still in force, pointing upwards. And that's it. I mean, this makes daily, weekly analysis more easy than ever before. Yeah, just load your daily series, ensure that you load more data to your chart, switch to the weekly, make your start and end point, and then you can switch forth and back without changing anything and just do the daily and weekly analysis. And by the way, the weekly aggregation would also work with any other 2 days or 3 days time series. That's the aggregation daily to weekly. If you're dealing with intraday or weekly data by default, there are some other features and possibilities in there in addition. So let's look at these now. Maybe you have realized this already. It's related to intraday data. So let's use another example here. What I'm using here is some live streaming information. So I'm using the ES 20 minutes, so the E-mini futures on the 20 as a 20-minute chart, which is live data. So this is the UTC time zone. So this is the live data of that the E-mini now at this point as we speak. This is the 20 mini. That's not important. I don't want to get into the concrete analysis, but let's assume you're doing some intraday cycle analysis. You have whatever intraday time frame charted here, and we start as always. That's the original time series you are starting with. So now we cannot, so this is grayed out here, we cannot aggregate from intraday to weekly. This is a too high aggregation. But what we can do is we can aggregate any intraday time information, any. So it doesn't matter if you have 30-minute, 1 hour, 5-minute charts, whatever. We can aggregate or resample any intraday data set into 1 hour daily charts and not daily intraday charts. So that's the interesting point here. Again, you need to be careful, and you get the information warning here, so that upsampling from 800, it's always 820-minute bars into 1 hour bars, will then sum up to, you've seen the warning, will sum up to 284 bars, which for hourly charts is also not enough. So same procedure as on the weekly. Ensure before you upsample or resample that you load more data to your chart. So I have now also loaded more 20-minute data charts here. Now I go to the higher time frame. I adjust the starting point of the analysis, maybe using this low here. Redo the analysis, now using 1000 data points for the 1 hour chart, which is fine. Once I have aligned the start and end point for the resample data, I can switch back between the original series and you know it remembers the start and end point for the original series is different. You see the spectrum, that's the spectrum for the 20-minute. And by just clicking the 1 hour chart, I always get the 1 hour information regardless of whatever smaller time frame I have used. I could do the same with 5-minute data bars. So I can always switch to the 1 hour chart just by one mouse click and see the spectrum for the 1 hour chart. Do the cycle analysis as we always do here. Apply the cyclic RSI indicator, which by default will show up here. So you see it's just by switching to the 1 hour chart, you see the cyclic RSI. On that information, you pick the dominant cycle. Same, this is the 20-minute. Just switch to the 20-minute. You see the cyclic RSI and the spectrum for the 20-minute. So on the fly, I can do the short-term analysis on the original series. In that case, I'm using 20-minute data, or just upsample to 1 hour charts without loading a new data set. So that's the beauty of resampling. You see here it's always aggregating into the current hour, yeah, and it's using the last price within that hour, which is available to show on the chart. So it's also not using some smoothing or moving average to get the price, as you would do with the time series. If you chart it, it's using the last price at that 5-minute, 20-minute, or 1 hour information you have in the original series. So that's the aggregation to 1 hour, which is a time-based aggregation into blocks of the full hour. There's another feature available, which is shown here as 4B. And that's a little bit different than the other aggregation functions, because the resampling into weeks and resampling into 1 hours are related to either the calendar week or either related to the full hour. Easy, I think. So, but we could resample to any given chunk in a higher series. So therefore, 4B just stands for the aggregation resampling into chunks of 4 bars. So it does not take into account any time frame or time series duration for each bar. It is just using 4 bars to aggregate into one. So if you would have 30-minute chart, you would get 2 hour chart. If you would have weekly charts, you would approximately get monthly charts. If you would have 1 hour bars, you would get 4 hour bars by the aggregation into 4 bars chunks. I think you got it right. So it is independent from the time series you have currently in your original series. It is just aggregating 4 bars into one. And as always, it's doing here the same. So it's using 4 bars, and as a starting point, you will see the start, timing-wise, the start point, and then the last close within these 4 bars. So it's not using the average of these 5 bars as you would have with higher time series. It is using the last available price information for that chunk of 4 bars, which is aggregated. Here, if you go into the details, it will start with the last time information available. So for example, now we have 20 minutes past 6. So that would be the current bar, and then it will take the 3 previous bars, whatever distance you have, sum it up into a chunk of 4, and use this price information for that bar, and then moves backward in time to build the chunk of 4 bars. I hope I explained it. So just show you how it works. Let's switch back to the original series, which in that case, it's the 20-minute charts. If I would aggregate into 4 bars, here to be careful, 4 multiplied by 20 minutes, I would get 80-minute charts. So 80 minutes charts, 1 hour and 20 minutes. So just by pressing 4B, it's aggregating into 4 bars. You get the warning again if you don't have enough data, or at least if you don't have set the anchor point. So also here I need to adjust the anchor point that I have enough data for the cycle analysis, which I have done now. So I'm using 1000 data points on 80-minute bars now, and I can switch between 20 minutes, 80 minutes, and 1 hour. So 1 hour and 80 minutes, which would be quite similar, but you see from the spectrum that there is a difference. So on the intraday analysis, I can switch between 3 different aggregation functions, and I see the cycle spectrum just on the fly. So we have automatically updated by the aggregation the new spectrum, the new dominant cycles, the new ranking available, the new cyclic RSI. So everything is there just with a mouse click. That's it. So that's the simplified multi-time frame analysis just from one raw data series. That was the purpose for today. So I hope you like that new feature. The daily feature is available for every basic member, as we provide daily, weekly data anyhow for basic members. The intraday features, then you need to have the higher tier, so the analyst subscription, that's then available also to all analyst members. So please try it out. This is a reference recording also how this feature works for future users, so that you can also refer back to this video to get the details and background how this resampling feature works. We can adjust it in the future. We can offer even more or different aggregation features if required. I mean, the aggregation is just a mathematical time series feature, which is now implemented. If there are different aggregation chunks, time series you would be interested in, just let us know. Drop your comments of what aggregation you are looking for in the video, so I can also refer back to this video to see what is maybe missing in regards to features on aggregation, resampling, data series. Make it easier for you, for us, to do multi-time frame cycle analysis and becoming more and more independent from complex loading of data series weekly, 1 hour, 20 minutes, ensuring that we have all the streams set up, the 20-minute, the 1 hour. No, you just need one stream, and then use the aggregation functions to do your multi-time frame analysis just with a mouse click, just with breeze. That's the purpose of the foundation for the study of cycles. That's the purpose of the cycle analyzer. That's the purpose why we are here every week, every Monday. Let's talk about cycle analysis. So today was just the kickoff for 2024. I think there's much to come. You are invited. Join us tomorrow with more in-depth analysis in the Financial Summit. We are kicking off tomorrow. And then I hope to see you every week, Monday, same time, same place here on this channel. And it's just an exception for today because I cannot see the chat live here. I really need to excuse for that because, you know, I always like to take your questions live into the session. So next Monday, try it out, play with it. Next Monday, we can have a live discussion here, Monday, 6 o'clock. So have a very nice, good, healthy 2024. And I hope to see you in a lot of weekly Cycles TV sessions here during the course of the year. So see you there. Stay safe.